Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Palantir Technologies.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
The fundamental story here feels like it's all about explosive growth, especially in one very specific area. What's the main headline from the latest results?
The headline is really two things: acceleration and profitability. Total revenue for Q3 2025 was $1.18 billion.
Okay, which is a huge jump, right? About 63% year over year.
Exactly, 63%. But honestly, that's not even the real story. The true story lies in the domestic commercial market.
Ah, right.
We saw U.S. commercial revenue surge by an astounding 121% year over year in Q3.
121.
Yeah. It marks the fastest expansion in the company's entire history. This is the new growth engine. It's on fire.
That triple-digit growth is just, it's incredible. Are they expecting to sustain that kind of pace?
They are. And this is what's so surprising. They are guiding for Q4 to maintain that momentum. They're projecting another 121% year-over-year U.S. commercial revenue growth.
Wow.
And management also raised the full year 2025 revenue guidance. They're now looking at approximately $4.4 billion.
So that's what, about 53% year-over-year growth for the whole company?
About that, yeah. Which significantly beats what anyone was expecting just a few months ago.
Okay, so let's unpack this a little. Are they growing fast and making money, or is this, growth at any cost?
And this is where it gets really interesting. They're actually achieving consistent GAAP operating and net income. Real profits.
Not just adjusted numbers.
Not just adjusted numbers. And their Q3 just operating margin hit 51%.
51% margin.
51. So when you combine that growth rate with that margin, they achieved a remarkable Rule of 40 score of 114%.
114.
That kind of efficiency is it's incredibly rare for a company that's growing this fast.
And how solid is the balance sheet that's supporting all of this?
It's what you'd call a fortress-like balance sheet. They reported $6 billion in cash.
And no debt?
No debt. Their current ratio is over 6 times, while the industry average is, under 2? That gives them immense financial flexibility for investments.
Okay, so that growth has to be driven by their AI platform, AIP. What is it that makes AIP so sticky, or I guess so hard for competitors to just copy?
The moat isn't really the AI models themselves. I mean, lots of companies have AI models.
Yeah.
It's the ontology-based data integration.
Ontology, that's a term that gets thrown around a lot with them.
It is, but it's key. Their platforms, Gotham and Foundry, they're deeply embedded. They handle mission-critical data and operational workflows.
So it's not just a dashboard, it's running the factory floor, so to speak.
Exactly. We have this one example of an industrial customer. They're using the platform across 175 different use cases. And they reported saving over $30 million in just the first half of 2025 alone. That creates massive switching cost.
$30 million in 6 months. You're not going to rip that out.
You're not. And they're successfully translating this into new sectors. We saw a multi-year partnership announced with Fedrigoni.
The specialty papers manufacturer.
Right, a global company. And they're starting with stock optimization and demand forecasting. It just shows their AI is penetrating traditional manufacturing.
And they're also landing pretty significant partnerships way outside their traditional, government base.
Absolutely.
Huh.
Recent announcements include a multi-year deal with FTAI Aviation for engine maintenance efficiency.
Okay.
And a strategic partnership with Stagwell to create an AI-driven marketing platform.
So aviation, marketing, they're really diversifying.
They are. And there's also a lot of chatter around a major expansion in the insurance industry, specifically with the launch of a new Lloyd's syndicate, which is backed by Blackstone, that plans to leverage Foundry and AI for risk assessment.
That would be a huge validation.
A massive one.
So the momentum is really confirmed by real-world adoption and the new contract value, I assume?
Correct. Total contract value hit a record $2.76 billion in the last quarter.
$2.76 billion.
And that's up 151% year over year. The land and expand strategy is clearly working. Customer count grew 45%.
Okay, so this all sounds phenomenal, but despite the exceptional execution, the conversation, it always comes back to one big hurdle: The valuation.
That's always the elephant in the room with this company.
And this is where it gets really interesting for investors. We've seen the stock pull back from its peak recently, even after these strong earnings. Why is the market so nervous?
Well, the expectations that are baked into the price they're extreme. The company trades at a forward price-to-sales ratio that is just significantly above its industry peers.
Can you put that in perspective for us?
To put in perspective, their ratio is currently many times higher than giants like Microsoft or Alphabet or even NVIDIA.
Wow, so investors are pricing in, what, years? Maybe even a decade of perfect execution. It leaves very little room for error.
That's it, exactly. Analysts worry that if the acceleration slows down even slightly, say, if that triple-digit U.S. commercial growth slips, the stock could suffer what's called multiple compression.
So even if the business is still great, the stock price could fall.
It could fall hard.
And what about competition? Are the big tech rivals breathing down their neck?
Yes, of course. They face intense competition from tech giants with far deeper resources.
And they can bundle services?
They can bundle services at lower costs. That's the big risk.
Yeah.
Palantir has to constantly differentiate its offering through that mission-critical integration and, of course, its focus on security.
There has also been a fair bit of noise about insider activity.
That's right. Now, the CFO's recent sales of over $2.8 million in shares, those were noted as automatic transactions, mainly to cover tax withholding on vested stock.
Which is pretty standard.
It is standard. But the broader trend shows hundreds of executive sales over the past 6 months, with essentially zero open market purchases. And that's a pattern that often raises some skepticism among investors.
Yeah. You like to see management buying, not just selling.
Exactly. And one final point of caution is the rise in accounts receivable.
Oh, interesting.
It climbed 75% to over $1 billion. Now, that can happen with fast growth, but it suggests you really need to monitor their working capital efficiency as revenue accelerates so quickly.
Right. Got it. So looking at the stock price itself, it's had a huge run this year, up well over 100% year to date. It's really confirmed its status as a core AI winner. What are the key milestones ahead for the company?
Well, the fundamentals really do suggest this is a multi-year growth story anchored in AI, and that balance sheet strength we talk about, that's a massive buffer.
So what's the next big catalyst?
The next major catalyst will be the Q4 earnings report, which is expected in early February 2026. And given that they've already raised guidance to 61% total revenue growth and 121% U.S. commercial growth, well, the market is going to be looking for another beat and some clarity on the 2026 outlook.
Which raises that important question again. Can they continue to beat expectations that are high enough to justify that premium valuation?
That is the central tension of this stock right now. The technical setup looks bullish. It's trading above key moving averages, but the volatility is high. It offers opportunities, but only for investors who are comfortable with some pretty big short-term swings.
So what does this all mean for you, the listener? Palantir is combining rare hypergrowth with real profitability. Its price, though, reflects maximum optimism. The question isn't if the business is strong, but whether that AI tailwind will be powerful enough to continue lifting a stock that's already trading in the stratosphere.
And remember to consider whether the exceptional nature of its AI moat, its ability to move from a pilot program to full production almost instantly, can truly insulate it from the inevitable competition from bundled, lower-cost rivals.
That's a great thought to leave you with. If you enjoyed this analysis of Palantir Technologies, make sure to subscribe and share this episode. We'll be back soon with more Smart Wealth.